Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the year-to-date return on investment, or ROI, as a function of time for prior years. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We are going to end that sale in about 1 week. So make sure you check it out. We do have several different tiers that you can sign up for, and one of them is in fact free. So one of the things that I think is worthwhile to do is just look to see how does Bitcoin perform over various years. There's no denying the similarities between prior bear markets. For instance, we had a bear market in 2014, we had a bear market in 2018, and now we've also had a bear market in 2022. And coincidentally, the 2022 drawdown from January 1st of its respective years for 2022 actually ended the year somewhere between the 2014 and 2018 bear markets. Now, we know that when you look at, say, like the drawdown, the total drawdown of Bitcoin from the all-time high, it's actually been a bit more tempered so far this bear market. But if you just measure it from January 1st for every single year, you can see that 2022 sort of came in between 2014 and 2018. Now, I think the next thing to draw your attention to, though, is what happened in 2015 and 2019. So 2019 came just after a 50% correction by Bitcoin. So we have to keep this in mind. So if you go take a look at Bitcoin in 2018, you'll note that we had basically we had a 50% correction just before the year ended. So everything was completely oversold, and then everything rallied for like the next half year or so, and then that rally was faded until the end of the year. Then we got into the halving and the pandemic and everything, and then the rest is history. But when you go take a look at just simply what happened in 2015 and 2019, what you'll notice is that they actually look somewhat different for the first 9 or 10 months, but they actually ended the year with an ROI both between 1 and 2. So the first thing I should say is that if you're in the bullish camp for Bitcoin this year, then I think it would be fair to say that your expectations of the potential upside during the year after a bear market, they should be somewhat tempered. One of the reasons is because it's often seen as sort of like a recovery year, where maybe things aren't as bad as the year before, the bear market years of 2014 and 2018 and hopefully 2022. But it doesn't necessarily mean that Bitcoin is going to new all-time highs. And I do see some people think about or put out this idea that Bitcoin will go put on a new all-time high in 2023. And a long time ago, a few years ago, I was a bit more optimistic about that potential outcome. But it is what it is, right? I mean, Bitcoin, it just came out of a bear market, a full bear market year, and we're likely looking at a recovery year for 2023. And when I say recovery year, I don't mean that Bitcoin is going to new all-time highs. I don't think Bitcoin will hit a new all-time high in 2023. I just simply do not think it's going to. We have a recession to contend with. The Fed raised interest rates by quite a lot, as we thought they would, and they'll probably continue to raise them at least for the first part of 2023. We're only going to now just start to feel the rate hike effects from 2022 now, because it takes about a year for them to propagate throughout the economy and for earnings to really get affected by a lot of these interest rate hikes. But while they both ended the year somewhere between 1 and 2, that doesn't necessarily mean that's what's going to happen this year. But the other thing I'd like to point out is that in 2019, so both years, they ended up going lower, at least for a period, than where they opened the year. So if we throw on 2023, that's this little blue line that just started. 2019 did go lower first before going back up to the upside. 2015 went much lower, right? I mean, this is another, 45% correction almost right off the bat for Bitcoin in 2015. Now, remember, 2015 came after 2014, which measured year to date was not as bad as 2018. So 2014, there was a little bit more to unwind. 2022, again, still sits somewhere in between 2014 and 2018 when you measure the year-to-date ROI in 2022. Of course, both 2014 and 2018 did experience further drawdown than where Bitcoin currently is. Okay, so these are all important things to consider. Now, with regards to 2019, one of the things that I think is probably worthwhile to sort of look at here is after this final capitulation, which marked the market cycle bottom, Bitcoin still more or less hung around the lows for most of the year. Okay, so whether, really no matter what, it's likely going to be somewhat of a boring year. I could put out all sorts of sensationalist price predictions and all this sort of stuff. Everyone loves that stuff. But the truth is it's going to likely be a boring year. Okay? And again, everyone always wants to know when's the bottom going to occur. There's always, of course, as we get further and further in, the probability goes up that the bottom will in fact be in. But to assume unilaterally that the bottom has to be in just because we're in a new year might be a little bit too optimistic, considering that 2015 had no problem continuing to go lower. So there is a chance, at least, that 2023 could find a new low as well. 2019 did not, all right? So an important consideration, 2019 did not find a new low, but you can see that it has happened before, right? And then actually the 2013 bear market, the 2014 bear market actually started in November of 2013, and it ended in January of 2015. But on some exchanges, we actually went lower in August of 2015. Now, I think most exchanges did not put in a new low in August, but some of them did. Therefore, whether you want to say the bear market ended in January 2015 or if it went all the way out until August, I mean, it's somewhat irrelevant. It's more or less just like a double bottom. But the point is, once the bottom was in, if you do say it was January, we still retested it more than half a year later before the bull market was in full swing again. I finally was seen I have bronchitis, so if you're wondering why I can't stop coughing, now you know. So 2018 also saw something similar, right? Bottom, pretty nice move to the upside. And then it's kind of like a double bottom, right? It's interesting because it's like, Bitcoin has done this thing where it often finds some type of double bottom before going off into a new bull market. Now, is that going to happen this time? Well, of course, that's up for interpretation. I would put forth the idea that it might not happen this time. One reason we should be on our toes more so than normal is this bull market had a double peak, right? Very different than these, than this like these major capitulation or these major blow off tops followed by fairly quick capitulation. So there's a non-negligible chance that whenever Bitcoin finds its bottom, it bounces there and we don't put in another double bottom. We have to consider that as a possibility. Failure to consider all outcomes is not really a good strategy in my opinion. You should consider various outcomes, because if you don't and you have your head stuck in the sand because you think what's going to happen or whatever, what happens if it doesn't happen? You have to be able to look at alternative scenarios. I mean, of course, I struggle with this myself sometimes. But it is something that we should always strive for, is to think, what happens if another bottoming pattern occurs? This is the first time we had a topping pattern that looked like this. So perhaps the bottoming pattern could look somewhat different than what we've seen before. Going back to the year-to-date ROI. Now what I'd like to do is take a look at the halving years, okay? So in this case, we're going to take a look at 2012, okay, 2016, and 2020. These are the halving years for Bitcoin, right? And what you'll notice is that by the end of those years, the ROI for all three of them was between 2 and 4. But in fact, the highest one, you might assume because of diminishing returns, it would have been 2020. But actually, in terms of the ROI year to date, 2020 was higher than 2012 and 2016 by the end of the year. Now, some of that could have been caused by the excessive money printing by the Federal Reserve, but at the end of the day, it's just a detail. I mean, it's an important detail that we have to consider, but what matters at the end of the day is just what is the return, not the narrative to go behind it, right? The narrative doesn't go into your bank account, right? The money you get actually does. So you can see here that 2020 actually yielded the best year-to-date returns as a function of time for halving years. So what do we have here? And we're just trying to keep it as real as possible, right? We have the bear market years, pretty much down only, right? And this is why I said all of last year, stack cash, take a cold shower if you're considering buying altcoins and reconsider, because it's likely just a bear market and everyone's going to get hyped up about every single new rally. But at the end of the day, everything's likely trending down for 2022. And I think that, I think that has come to pass. And I think we'll just remember 2022 as a bear market year. Now, there were the people, I guess, that were hoping that June was the bottom. And there were a lot of people that were hoping that was the case. But I think it was still falling into the same trap that a lot of people fell into in 2018, right? Thinking that June was the bottom. And I was one of them in 2018, right? Like, I thought that June was probably the bottom in 2018. But guess what? It wasn't, right? It wasn't. And November brought capitulation back then, just like we saw some move to the downside this time as well, although it wasn't quite as significant of a capitulation, at least not so far. So you have the bear market years of 2014, 2018, and 2022. You have the recovery years of 2015, 2019, and now hopefully 2023. But a recovery year does not mean there's no further downside. There was further downside in 2015, and even in 2019, again, there was further downside, but we did not put in a new low. There was further downside from the year-to-date open, but we did not put in a new low. So you should be I think people should temper their expectations for 2023 just by looking at the context of what happened in prior recovery years after a major bear market. Okay? 2019 wasn't all that bad for at least the first half of the year. The second half of the year sucked, right? It was pretty brutal. It was just a slow bleed again. Made us wonder, what's really going on here. But 2015 was actually a lot more difficult. Now, if we were to follow 2015, which we should consider, so if we were to follow 2015 and we get some type of capitulation or final move to the downside within the next few weeks or so, we certainly could just sort of scrape those lows for a majority of the year. And that's something that we have to, we just have to admit, right? This is a possibility that it could play out. And if it does, it's likely just going to represent a great accumulation time for people if we see these types of massive capitulations down. Just something to keep in mind. After those years, you get the halving years of 2012, 2016, and 2020. Pretty good years, all in all. I anticipate that 2024 will be a relatively good year, okay? Now, one place that I could be wrong about that is because I do think we are heading in towards a recession, right? If you take a look at the treasury yield spreads, right, you can see normally there's only one way out when they get inverted like this: the 3-month, the 10-year, the 2-year, the 10-year, and it's out via recession. Now, I think the recession is going to come in 2023. I suppose if you were to tell me, if you were to say, well, Ben, what if 2023 or what if 2024 is not a good year? The only way that I think that, well, maybe not the only way, but I would say the highest likelihood of that happening would be if somehow the 2023 or the recession that I think is coming in 2023, if it's delayed until 2024 because the U.S. economy is more resilient than a lot of people think, then perhaps I could be off on that. But even in that sense, if you were to see some type of recession in early 2024, if it doesn't happen in 2023 and it happens in early 2024, just like we had a very brief one in early 2020, but it doesn't necessarily mean that year has to be entirely bad. Like you could see some type of move to the downside, just like we saw in March of 2020, but we could still be moving back up by the end of the year. So even if the recession is delayed until 2024, it still doesn't mean that the entirety of 2024 is going to be a bad year. I do think 2024 will likely be a relatively good year for returns in risk assets. 2023, I think we still have some pretty big macro headwinds that we have to face. It doesn't mean we're not going to have some rallies this year. We probably will. It just means that a lot of those rallies will probably get faded back down. And as hard as that is to hear, I mean, this is what we've seen before, right, in recovery years after major bear market years. So the main points I think we need to come away with is that, 2014, 2018, 2022, all major bear market years. The years that came after them, at least for 2015 and 2019 was at least somewhat interesting, but all in all, the final return by the end of the year was between 1 and 2, and 2015 saw new lows for that bear market. 2019 saw lows compared to year where it started the year, but it didn't actually put in a new macro low. So again, we have to understand where we are and what are the risks. So there is always a risk we're going to put in a new low. But even if we don't, we're still likely scraping the bottom for a while, right? It's just what it is. And then finally, you get the year after the halving years, which tend to be the best years. And those would be 2013, 2017, and 2021, right? Now, in this case, the last year, 2021, was actually not that great of a year compared to 2020. So if you were to put 2020 on here, 2020 for Bitcoin was actually a bit better than 2021. But 2021 wasn't all bad. I mean, it still ended the year between 1 and 2, about 1.58. It's just that a lot of the parabolic rally that Bitcoin had in the last bull market actually occurred at the very end of 2020. And so by the time we got to 2021, Bitcoin was already at like 28K or something. It was already like 10x off its bottom almost. So something to consider. But again, I mean, you can see if you put up all of the halving years and the year after the halving years, they're all pretty good years, right? And I'm not under the delusion that the halving is the only thing that leads to Bitcoin bull markets, because I don't think it is. I'm sort of in between. I mean, I know some people say it has no role, and then some people say it's the only thing that matters. I'm sort of in between. I think it is important. I do think the narrative behind it brings in people to the space. I can still remember like every single halving, it seems like there's just like an influx of new people. It's like a popular narrative, and you'll see it amongst various news sites and whatnot, and people will be talking about it. It'll likely bring people into the space. So I do think it has a positive effect on the price of Bitcoin. But I also think that it has happened so far to correspond mostly to a period of quantitative easing and relatively loose monetary policy. But again, like we still probably will get back to a phase of looser monetary policy by mid to late 2024 at the latest. So I could still see things lining up for things to start looking better again in 2024, right? I mean, the Fed will have raised their interest rates to probably whatever they're going to leave them at for a while. And perhaps they'll leave them there for 9 to 12 months or something. But eventually, I mean, assuming they kick us into a recession, which does seem like the most likely outcome, and assuming that CPI goes down, which inflation normally goes down during recessions, right? If you go take a look at inflation year over year, what you'll notice is that these little gray shaded regions, these are recessions. They tend to bring inflation down. So if we get one, inflation's likely coming back down. And if inflation comes back down and the Fed's got interest rates somewhere between like 5 and 5.5% or something, then they'll be inclined to sort of cut rates at some point. Oftentimes the market continues to go down right when they first start cutting rates. But it does at least mean that we're getting closer to the end of the bear market, right? Of course, technically speaking, I guess every single day we get closer to the end of the bear market. So it's not exactly the most insightful thing I've ever said. But hopefully this video has been useful and helps you to sort of better plan and prepare for the most likely outcomes throughout the next 1 to 3 years. My general assessment right now is that 2023 is just going to be a recovery year where we don't really see any crazy rallies to the upside. It doesn't mean that Bitcoin can't go back up into the $20,000 range. It could. We could go back to the $20,000 to $30,000 range. It just means that we could see new lows based on what happened in 2015. And even if we don't see new lows, we're still scraping the bottom probably for quite some time. Next year will probably be better, and there's a good chance the year after that will also be a good year. But 2022 sucks. 2023 is going to be somewhat boring, and then the Taurus will probably return next year. So that's just the way the cycle tends to work. It's how it has worked for a long time. Hopefully you guys enjoy the content. Make sure you subscribe, give the video a thumbs up. Remember to check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link is down in the description below or the pinned comment. See you guys next time.